Hey all, welcome to ShareTreck. It's the 28th of April 2022, and this is our daily update. As always, three parts: news and geopoliticals that will affect the market today will be the first part. The second part is going to be technical analysis of the indices, Bitcoin, and gold, and then we'll go on to look at genomics. So let's get started. Here are our headlines for today. Southwest Airlines meets expectations and hopes higher margins ahead. Basically, they expect to beat the current performance going forward with lesser flights and lesser passengers, but higher margins. So that's how they have reported, and that's been a positive catalyst for the market, in my opinion. Denmark has become the first country to halt its COVID vaccination program. And as you know, many of the pharma companies have been reporting high levels of income, companies like Pfizer, for example, on COVID. And those companies will not be able to get the same kind of revenue. Some of them have already said that going forward, they're not going to show COVID revenues as a separate item. They showed it when it was to their advantage, but now it's going to dwindle. So it's going to go off from visibility and it'll get married into the other revenues and it'll slowly fade away. So that's what I think is likely to happen out there. Qualcomm revenue up by 41%, and they forecast stronger than expected results, as compared to what the street is expecting going forward. And Qualcomm had the revenue beat basically because of their chips which go for Android phones, and they excelled in all their chip sales. So overall, it's a great performance by Qualcomm. It should definitely boost the market sentiments today. Caterpillar beats both on revenue and earnings. So that's again a wonderful beat by Caterpillar. This is part of the core sector. So this is going to be very good for the market. It will give more confidence and boost the market today. US Q1 GDP fell 1.4% versus analyst expectation of a 1% gain. So basically, we are down 2.4% from what the expectation was, because against a gain of 1%, we have a loss of 1.4% in the GDP, 4% in the GDP. So that's a total loss of 2.4 when compared to street expectations. This is definitely going to have a bad impact on the market. Teledoc is a chapter in itself. I have to unravel the multiple layers because I also have some holdings in ARCG. And Teledoc is a big portion of ARCG's portfolio. It's a terrible day. Teledoc stock price created 43% after the telehealth company reported an earnings miss. I think it will drop even further. That's my gut feel. It also reported a disappointing revenue guidance going forward earnings. Teledoc reported a loss of $41.58 per share. I had to record this segment twice because I couldn't believe the number that I was reading. A loss of 41.58 per share and generated revenues of 565.4 million. So the revenue expectation was 568.7. So the revenue fall is not that big. But the loss that was expected per share was 60 cents. Against that, we have got $41.58 loss per share. And that's going to be punished really bad. ARCG holders are also going to have a big hit. Teledoc was hit by higher advertising expenses in the mental health market, as well as an elongated sales cycle in chronic conditions as employers and providers of healthcare plans evaluate strategies. Here is the rub. ARCG has a huge Teledoc position. Before results, ARCG had a 12% stake that was worth about 1.1 billion as of close of Wednesday. This makes Teledoc the third largest holding in the ARC Innovation ETF, which hit a 2-year low this week. And in fact, to compound this further, ARC added to their positions in Teledoc on Monday and Tuesday ahead of telemedicine providers' report. So this is just crazy. They have lost significant amounts of money. All the money that they put in extra on Teledoc on Monday and Tuesday has already lost 43%. I don't know how Cathy Woods is going to survive this, because first of all, Teledoc is not a genomic stock and it had no business being there in ARCG. So that's what I am also really upset about. But anyway, we got to keep this video short, so I can't keep on ranting about this. So let us go on and look at the other headlines. Russia and Ukraine conflict continues. Poland and Bulgaria have been kicked out of the Russian gas supply. So they are shopping for stuff elsewhere. But here's the kicker. Russia doesn't have too many terminals to freeze gas and export it by sea, whereas Poland and Bulgaria have been working in the past to have enough port facilities to import liquefied gas and then use it for their own consumers. So they are not that bad off, Poland and Bulgaria, but Russia is definitely going to have revenue crunch going forward. All other risks continue to remain the same. Just to give you a review of all the risks that we have, China is having enormous problems with its economy. Turkey is having hyperinflation. We have got Iran agreement still to come into place to release some oil out there. There is also going to be an impending food shortage because Ukraine is a breadbasket of Europe, and that food shortage is already starting to cause problems in the Middle East. So that is all those factors going on. And then, of course, we have the entire Fed angle of it, which is one is the interest rate hike. The other one is shrinking the balance sheet. So when they start shrinking the balance sheet, banks are going to have less and less money to lend. And when they start selling mortgage-backed securities, which I think they might probably do in order to shrink the balance sheet, at that time it will become even more difficult for many people to get mortgages. And there is the housing crisis that is going on. So there is a lot of negatives out there, but there are these positives that have come today to give us a boost. Let us see if the market can take this and run. So it's around 9:49 a.m. Let us go and have a look at Nasdaq and the other indices. Let's look at all our indicators. First, I'm going to look at the futures. The futures are marginally up, so that's a good sign. And then let's go on to the indicators. And in the indicators, I would like to start with the put-call ratio. Put-call ratio is high, so there is a bearish sentiment out there. And let's go on to look at the VIX. Where is the VIX? VIX is out here. VIX is dropping. That's a good sign. We have hit the peak there and we are coming down again. So we have plenty of support. So it's going to be a bit of a slow walk down. The MACD is also showing encouraging signs of moving towards the signal line. So that's good for us. And then let's go and look at US oil, which is up marginally. It's hitting against this line of resistance. Chances are that it may break above it and then it will get stopped by 107.52. That is my expectations. It has support at 95.08 in case it decides to come down. So right now it has a support from the 50-day exponential moving average. And when we look at the MACD, it's looking bearish, but ready to cross over to the bullish side. And also we have momentum, which is average, but slightly pointed upwards. So there's a good chance that we may have an increase in oil price if the MACD turns around. Now let us look at what we have here with regard to Nasdaq. So I'm going to look at IXIC because there's a lot of lines that we have drawn here for resistance and support. So that gives me very good context. I haven't done the same on QQQ yet. So right now out here we can see that 12,593.84, sorry, 12,560.87. This is the support that's holding us back. We have gone above that at open thanks to the encouraging results that have come from Facebook and a few other companies, Caterpillar and all. So we are looking slightly better. We started higher, but we started falling down. So we're going to test this support at 12,560.87 again today because our MACD is bearish, even though it's trending towards the signal line and momentum is below average and slightly flat. So that's what I would observe out there. And if we look at the yield for the 2 years, it's going up, and our correlation between hike in Nasdaq or hike in tech shares has been that if the yield falls, the tech shares do better. So this indicates otherwise. However, there are a lot of positives that have come up in earnings that are likely to play out in the market today. So if I go to QQQ, which is live, we can see that QQQ is marginally positive today. Just like we saw on IXIC, it raised early and it came down, and it's now hitting against the resistance support of 319.31, and right now we are at 319.23, which means we are just dropped below it. I'll leave it right now as a support because we are actually negotiating that support. If it gets validated and kicked back up, it will go to 344.63. If not, it's going to go down, and I think our next level of support would be somewhere around 310.33. That's where I think we'll end up with the next level of support. I'll draw the support lines later on after the video session is over. Having said that, I think we have to go and have a quick look at our crypto space. And here is Bitcoin. And as you can see, Bitcoin has fallen out of the bull channel, and the support of the bull channel is now becoming a resistance. And we have the 9-day exponential moving average, which is a constraint. MACD is also looking weak, and so is momentum. So right now, Bitcoin seems to indicate that it's going to be bearish today. When you look at gold, gold has picked up slightly, and it has bounced off the support out here, which was at 1871.01. And right now, the 100-day exponential moving average is the constraint. We have a bearish MACD, but picking up momentum. We'll see how it goes towards the end of the day. With that, let's go and have a quick look at Genomics. So here are the Genomic shares that we track. I have sorted it so that the winners are on the top. So we have got Pfizer, Illumina, IMTX, and Novartis at the very top, with Caribou just about ready to get into the positive. As we saw in the earlier segments, there are mixed signals out there. There's a lot of bearishness due to unresolved risk, which is underpinning this entire market. The bright spots are the results that have come up from some of these companies like Caterpillar and Meta, who have given great results. And on the other hand, we also have some companies like Teledoc who have given really rubbish results. So all of this is going to play out. I think that going forward, mostly the companies which have done well and have projected for a better quarter ahead are likely to be priced better than the others. And if those companies happen to have a heavy weight on Nasdaq or S&P 500, then they will move the indices accordingly. That is my feeling. That's how we can try to remove the confusion from this market. So if any company has got a better prospect for the future and has met or exceeded the expectations currently, that's likely to be priced much better, and that may raise in a otherwise bearish market. That's my feeling. We'll have to check out how it works out in the next week or so. We'll find out. Meanwhile, let's look at each of these shares. We haven't done that in a while. So Pfizer is above this line of support at, I'm going to just check this out. It's 49.83. I'm going to mark it as a support. So that's a positive move for Pfizer. The day started higher for Pfizer, but it came down. It's now being supported by the 9-day exponential moving average. MACD is looking a bit MACD is bearish, but tending towards the signal line. Momentum is picking up, but it's below average. So Pfizer can continue to maintain a little bit of green today, given the fact that there are other positive catalysts in the market, and it's a dividend-paying company. IMTX is up 0.76%, and we have a doji candle today. The market is still deciding what they want to do, and we have a bearish MACD and a below-average momentum. So the remaining green that we see here is likely to vanish before the market close. Illumina is up 0.12%. That's around 36 cents, relatively flat compared to yesterday when it closed. So we opened higher and then we came down. So it's not a very great move as such. Our support still remains at 286.31, which is this horizontal green line out here. The momentum is absolutely weak. And the MACD is also very, very bearish. So it's gone to a point where I think capitulation will come for the sellers in this particular share, and we might see a dead cat bounce probably tomorrow. That's what I would say for Illumina. Next, let us look at Novartis. Novartis is up 0.07% while we were talking. We have a resistance out here, and this green line is at 89.53. So I'm going to mark this as a resistance. And our next resistance is going to be out here, which is 90.63. That's going to be the next resistance. And right now we are at 89.47. Our 9-day and 20-day exponential moving averages are becoming a resistance in case we were able to clear the resistance at 89.53. We have support from the 50-day exponential moving average and at 88.67, which is this line, this horizontal line of support. And our MACD is bearish and moving away from the signal line, and momentum is flat. So Novartis is likely to lose whatever gains it has got today and probably end flat or negative. Caribou Biosciences is down minus 0.68%, again constrained by the 9-day exponential moving average. We opened higher and we dropped down, so we are clearly in a bearish direction. Our MACD is also bearish. The momentum is also falling, so Caribou Biosciences is not looking good today. Vertex is down 0.55. It still has got the support from this diagonal line of support, which has got multiple touch points out here. So I would say we have support at 262.79. And if we were to come down today, we have a support at 261.57 for today. So our MACD is looking bearish and momentum is also below average and falling. We are likely to lose a little bit more for Vertex, and potentially we could even test this diagonal line of support, which is very strong because it's also followed by the 50-day exponential moving average, which is sitting at 259.03. Right now, Vertex is at 265.81. Editas is down minus 1.95%, and we have resistance from the 9-day exponential moving average sitting at 14.75, followed by a horizontal resistance of this red line at 15.37. And our MACD is moving towards the signal line, even though it is bearish and momentum is falling. Doesn't look great for Editas today. I will have to do a separate video on Editas, I have promised you. I'll try to do that this weekend or the following. Regeneron is down 1.24%, and we have a 100-day exponential moving average as the support and the 50-day exponential moving average as the resistance. The 50-day EMA is sitting at 677.69, and right now we are at 665.15, and the 100-day exponential moving average is at 656.36. So we are neatly between these two, and MACD and the momentum are showing absolutely bearish day, a brutal day for Regeneron today. IBB is down minus 1.33%. Definitely, I suppose the reverberations from Teledoc is going to be felt here. Overall, it's a bearish trend for biotech companies. Intelia is down 1.60%. 9-day exponential moving average is the next resistance. Again, all indicators are bearish. Bad day for Intelia today. CRISPR Therapeutics is down minus 1.46%. It has fallen below our support of 53.44. So I'm going to mark it as a resistance. All the indicators are looking bad. CRISPR Therapeutics is going to lose more today. We have the earnings coming up on 11th of May, so soon I'll come up with a video on CRISPR Therapeutics. Bluebird is down minus 3.25%, and our 9-day exponential moving average is a resistance for it. MACD as well as momentum are showing a very, very bad picture for Bluebird. We have the results coming for Bluebird on 4th of May, so look out for the weekend video on potential Bluebird earnings. Verve is down 4.22%, and the 9-day exponential moving average is becoming a constraint. MACD and momentum are both showing very, very bad news. I think that the serious miss of EPS in Teledoc has made everyone reevaluate their expectations for genomic stocks, and that could probably explain why we have this steady fall happening despite the initial indicators of prices firming up as they approach earnings. That's what I would like to say there. PSCB is down minus 5.27%. 9-day exponential moving average continues to keep moving down and pressing the price down. It's on a downward spiral. MACD and momentum are looking bad. No relief for PSCB today. Allogene also is looking really bad. It's down 3.58%. It has fallen below the 20-day and the 9-day exponential moving average, which were the support earlier. And right now, our MACD is turned bullish, but the momentum is dropping sharply. So that doesn't bode well for Allogene. Beam is down minus 3.64%. All of its indicators are showing a bad picture for today's action. We are almost ready to fall below the 30% of RSI, which shows that it's oversold. So there could be a little bit of a bounce, either late in the evening today or maybe tomorrow. ARCG is down 5.69%. Of course, this is bound to happen. It has fallen below the support of 36.91, so I'm going to make this into a resistance. Just let us take a note of where ARCG is as compared to its historic levels. It's down almost to where it was somewhere on 19th February 2020. So it has lost a whole lot of steam. And thanks to Teledoc, things are looking bad here. DNA is down minus 7.43%, and it has got the 9-day and the 20-day exponential moving average converted into a resistance. And our MACD has just about turned bearish right now. Momentum is also following a bad day for DNA ahead. Teledoc is being punished severely. So as I mentioned, 43% was not enough drop. It's gone down 46. I suspect that it's going to go down to minus 48 before the close of the day. There's been a steep drop out here. All the fundamentals are knocked out of whack. And you can see how the momentum has fallen down significantly. And there could be a dead cat bounce maybe tomorrow or day after once the selling finishes, because we are dropping off the charts out here and the results were horrible. So that brings me to an end of today's session. I'm sorry I'm a bit late today. The plumbers have come and made sure that there is no more leakage, but our drywall is wet and it's stinking a little. I have dehumidifiers on in the background. They are sucking out the water. So things are going to be back to normal, but the contractor doesn't have time until the Friday after the coming Friday. So we got to put up with this for another 7 or 8 days. It's very difficult to get skilled labor out here in Toronto, especially for home repairs. And the ones that are available easily do not do a great job. And the good ones have a waiting list. So that's where I am. Hopefully everything will get better as the days progress and the sun comes out and the temperatures rise. Things should get better. With that, I would like to say thanks for your support so far. Please press a like if you like this video. If you're not subscribed, please subscribe and join our community. Thanks and have a great day. Bye for now.